Why does every website want a different form? Why does this one want my soul? Why does this one want my tax returns from 2019? I didn't even exist in 2019. Who knew getting a business loan required actual business stuff?
I see you've discovered the real business loan process.
I discovered pain.
You discovered confusion. Pain comes later, usually during underwriting.
Under what now?
Exactly, which is why we're going to start from the beginning. Let's break this down properly, step by step. No panic, no chaos.
And no tax returns?
We'll talk about that part. For every founder who has ever tried to get a business loan and ended up exactly like this, overwhelmed, confused, and questioning their life choices, this video is for you.
Yeah, pull up a chair or a support group.
Today, we're walking through the entire business loan process, from forming your business to understanding underwriting, so you know exactly what lenders expect and how the system actually works.
And I'll be here to ask the questions you're probably thinking. Like, why does everything require paperwork? And why does the government love acronyms so much?
Let's begin. Before any founder can apply for a business loan, they must first form a business. Not conceptually, not emotionally, legally.
So you're saying my vibes-based business structure isn't enough?
Correct. Lenders do not accept vibes as legal documentation. Let's break down what forming a business actually means. Choose a business structure. Most small businesses choose an LLC because it provides liability protection and is simple to manage.
Plus, it sounds cool. Limited liability company. Like, I'm limited, but in a powerful way.
Register with the state. This is the moment your business officially exists in the eyes of the state.
And the moment the state officially knows you exist, which is less exciting.
File the initial statement of information. In many states, including California, this must be filed within 90 days of forming your LLC.
So basically, congratulations on your new business. Now, fill out more paperwork.
Create an operating agreement. Even single-member LLCs need one. It outlines how your business is structured and managed.
Mine would just say, Aster Fox is in charge of snacks and chaos.
And that is precisely why we write these documents down. Once your business exists at the state level, you must register it at the federal level. Get an EIN. Your employer identification number is your business's federal ID. You need it for business bank accounts, loans, taxes, payroll.
So it's like a social security number. But for my business?
Exactly. Except your business won't use it to open a gym membership. Understand your tax classification. Most single-member LLCs are taxed as disregarded entities by default. You can elect S-Corp status later, but it's not required early on.
Disregarded entity feels rude. Like the IRS is saying, we see you, but we don't respect you.
It is a tax term, not a personal judgment. This is where many founders unintentionally sabotage their loan eligibility. Open a business bank account. Lenders require your EIN, LLC approval, operating agreement, business address, personal ID.
So I can't just use my personal checking account labeled business stuff?
No. That is the financial equivalent of mixing laundry colors. Separate personal and business finances. This is non-negotiable. Lenders need to see clean, separate financial activity.
So, no more buying snacks with a business card?
Unless the snacks are for a business meeting.
Every meeting is a business meeting if you believe in yourself.
Start building business credit. Even pre-revenue businesses can begin building credit by opening a business credit card, putting small recurring expenses on it, paying on time.
So paying bills on time actually matters?
It always matters. Before applying for a loan, you must prepare the documents lenders expect. Business plan. Lenders want executive summary, company description, market analysis, products/services, financial projections, use of funds.
So basically, a school report, but for adults and with higher stakes.
Financial documents. Even new businesses may be asked for personal tax returns, bank statements, proof of identity, proof of address, business bank statements, profit and loss, if applicable.
Wait, personal tax returns? Personal bank statements? Personal everything?
Most business loans require a personal guarantee. Lenders want to know the founder is financially responsible.
I am responsible. Emotionally, spiritually, metaphorically.
Financially.
We're working on that part.
Understand your credit. Most lenders will check your personal credit score. This is standard.
So, the no credit check myth is a myth?
Correct. Not all loans are created equal. Let's review the major types. SBA loans require credit check, tax returns, bank statements, personal guarantee. SBA microloans, more flexible but still require personal financial review. Fintech loans, fast but expensive, require revenue and bank statements. Revenue-based financing, no credit check, no tax returns, based entirely on sales volume.
So, I need revenue to get money to make revenue.
That is the cycle. Grants, no repayment, no credit check, no financial review.
Finally, a funding option that doesn't want my tax returns.
Here is what actually happens when you apply for a loan. Pre-qualification. Lenders check revenue, time in business, industry, bank activity. Full application. You submit personal info, business info, documents, credit authorization. Underwriting. Lenders analyze cash flow, credit score, debt to income, business stability, Risk profile. Approval or denial. Funding.
So it's like a job interview, but for your business. And the interviewer is a spreadsheet.
Common reasons include no revenue, poor credit, insufficient time in business, mixed finances, high personal debt, no collateral, incomplete documentation.
So basically, everything I did wrong.
You learned, and now others will learn through you. If traditional loans don't fit your situation, you still have options. Grants, revenue-based funding, crowdfunding, micro-products and self-funding.
Finally, a chapter that doesn't hurt my feelings.
The business loan process is complex, but with the right knowledge, it becomes manageable. From forming your business to understanding underwriting, every step builds your financial foundation.
And now you know what lenders actually want and what they absolutely do not care about.
If you found this guide helpful, subscribe, share, and explore the full written version for deeper detail.
And remember, you can build a business without losing your mind. Mostly.